following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
Well, good morning. Welcome back. This is the Traders Workshop segment of the NinjaTrader live stream. And we brought back some very special guests we've had on before. In fact, I think we had them on last week. From EG Indicators, we have Dr. Efrat Levy and we have Trader Jaime Sandoval. So welcome to the show. We'll start with, I think, Dr. Levy. How you doing?
I'm great. How are you doing today, Tom?
Doing very well. We are this is our third week into our new format, and I think every week gets better. And thanks to guests like you, I know that'll continue. So I want to thank you for coming on. Everything good where you are?
Sure, my pleasure. Thank you.
Awesome. Great. So, we talked about AI in the past on your previous appearances, and I think today we're going to go a little bit deeper into some of that AI exploration. I think you have a great topic today, so I think we can just get started.
Yeah. So, hello, everyone. Today I'm going to talk about AI in trading, and I'll focus on significant price levels. So here's a quick reminder about me, co-owner of EG Indicators, which offers AI-based trading tools for day traders and focuses on futures trading. Background in machine learning and cybersecurity, academic degrees in computer science and engineering. And I'm happy to present you with the weekly agenda, Tom, which includes the topics we will discuss in the coming weeks. Significant price levels, randomness, what's possible and what's impossible. Anomaly detection in day trading and liquidity grabs, a very important topic. What confluence trading is, why it is important, and how it can be utilized to increase the probability of success in trading. Then I'll present more about us and our offerings. So today I'll focus on the market randomness, significant price levels, what's possible and impossible. And today Jaime will join me. Jaime is our day trader. He will present his point of view from a more practical perspective. So we know that the market movement is random. The market movement, at least from a day trading perspective, is random. It goes up and down, and then up, and then down again. And it is impossible to predict the price movement or whether the market is expected, where the market is expected to go up or down. But what possible is, statistically, is understand price levels whose market behavior is more expected and less random. And we're looking for these levels rather than flipping the coin. So we all remember how recently the Nasdaq broke all-time highs. And that was due to high-tech companies like NVIDIA focusing on AI technology. They showed a deep learning model able to generate video based on a text It's given automatically. So during the learning phase of the AI model, it was provided with data like text and short videos or screenshots. And during the inference phase, the trained model was able to automatically produce a video describing the given text. And AI can also use for calculating significant price levels for day traders. Given historical and correlated data, it can provide us with current day's levels respected for the market to react. And here are a few examples of how they look for different instruments, NQ, ES, and RTY. With that said, I want to thank you for your attention and invite Jaime to present his perspective as a day trader. Jaime, the stage is yours.
Thank you, Doctor. Thanks, Tom, also for the invite. I guess now I'm just gonna put it more into more of Dr. Efrat is more of the on the back end of the system, you know. So she talks about, she uses a lot of words that maybe us traders, you know, are not very too familiar with, or you know, make a little bit confusing or too technical, right? So I just wanted to share with you guys basically what that means for us traders, right? When we look at charts, right? Because
so Jaime, real quick, thanks for coming
yes.
on, and it's great to
Sorry.
have you on. And I realize you're new with EG indicators. You're new to the company as well.
Well, I've been a client with them for, I want to say maybe over a year already.
Okay.
So they were kind enough to invite me to join the team. So yeah, so here I am.
That's great. That's great. So it's interesting. I think comments that Dr. Levy made about it's impossible to predict price movement, right? And I completely agree with that. You know, there's just so many factors involved. And we actually have a guess the close contest. Our first contest, because of the new format we switched to, is a guess the close contest that you know, here we are, we have our viewers guessing and trying to predict what the price is going to be 2 days ahead, right? So I can't think of, you know, a harder thing to do really, you know, to ask our viewers to do that. So the one that gets closest will be hopefully rewarded very nicely. But this is trying to stack the odds in your favor based on that AI. And you know, it's interesting that Dr. Levy mentioned how NVIDIA, you know, was able to take text and make a movie, right? And that's something we can all relate to. Communication and writing and looking words on a piece of paper and somehow magically getting that video, which, you know, obviously in the past has taken, you know, a lot of time for people who do that specifically to do. Now it's done by a computer. But really, the AI being focused on the data in the markets, it's just a different data set, but very crucial to what we do. I don't want to downplay it. So interested to hear what your take is as a trader.
Right. Yeah. I mean, like you say, right? If we knew what the market would do, you know, we all would just be instant millionaires, right? We'll just be just placing trades because we knew what the market was going. We can get a very close idea. Now, it also depends what kind of a trader you are. I'm more of a day trader, more of a, you know, I like to see what the market is doing the day, like the session. And then if there's an opportunity, I will just go in and get out, right? That's the type of trader. There's other people that would scalp. There's people that are swing traders, you know, they hold trades longer. So it just depends what kind of your situation is. The beauty about this system is that it can adapt to any kind of trader. So you don't have to be a specific trader or have a specific trader way of trading. in order for you to take advantage of what Dr. Efrat created. So basically, like you're saying, we're taking advantage of technology, right? Nowadays, AI is just what everybody's talking about. And so what she did was able to use that technology and implement it into our trading. So that way we can have something on our charts that can help us, like you're saying, predict or trying to see what the market is trying to tell us, where the market is trying to go, and then use this tool to help us comprehend. And like I said, I'll show you here some samples of the way that I use it, the way that it has helped me. Because in reality, Tom, that trading is not that complicated, but we complicate ourselves as traders, right? We try to look at things that are not there, because that's what we have a chart, right? There's like I said, depends on the trader you are, but there's trading is not that complicated, but we just try to complicate it because we want to see things that are not there, and we want to create things that are not there. They're not happening. And a lot of times we just want to trade out of emotions, which is probably the worst thing you want to do, because you think that this is what the market is going to do, and you're not, just basing it on what it has done. Usually what has done before is what's probably going to try to do it again, right? So it's based on what has happened before. So once again, we use this kind of tools to help us avoid, right, making those mistakes where instead of you just thinking or out of emotions, thinking what the market's going to do, just use this kind of tools to help you make a better decision in regards to trading. Does that make sense?
Yeah, I do it all the time. I mean, I look at things from a couple different viewpoints, right? I have experience with looking at patterns. I have experience with looking at levels. We have all this information that we look at, and your brain, I think, is, like you said, trying to see something that isn't there. It's trying to complete the pattern. It's trying to say, I can see this going to this, pivot point or whatnot. I'm ignoring some other signals too, right? In the process of trying to fit that pattern, I'm ignoring what the market is doing. So, really listening to what the market is telling you is, I think, a skill that I think I don't care if you're new or experienced, it's something you're always trying to fight, I guess, against. And really, we have to find the best way to listen to the market, or the best way that works for us, I guess.
Right. And I mean, and again, it just comes down to what kind of a trader you are. But in reality, to be able to, become a full-time trader and actually make your living out of trading, you don't really need to, look for a huge moves on the market. I mean, again, it's a lot of factors, right? But just keeping it basic, you really just need the market to go your way a certain amount of ticks, depending on what you're trading. I'm right now, I don't know if your audience is like what I'm showing on the screen right now is going to be the futures market. Right. I'm looking at NASDAQ. So for those of you that know, I like to trade futures. That's like my main thing that I do. I like to do NASDAQ, S&P, Russell, oil, and gold. Sure. Those are the ones that I look at the most. And for those of you that know, the way that I like to categorize this is your S&P is going to be your more kind of mellow, like it moves, kind of like a little bit slower. NASDAQ is like for people that like just action, right? NASDAQ is people that just they don't want to wait.
Volatility, right? We call that volatility.
That volatility is crazy, right? Yeah. So NASDAQ is not for everybody, but all you need is just a quick move from NASDAQ in order for you to make a good trade, and then you can just take one trade and make whatever your profit is for the day and get out. That's another thing about this is you guys can see my screen, right?
Yeah, the screen is being shown. Yep.
Okay, got it. So like I said, I'm showing the futures market. This is the NASDAQ. I'm on a 2-minute time frame. The other thing that I want to mention about this what Dr. Efrat created, this AI tool, is you can use it on any time frame. You can use it on any market. Is the beauty about it. I mean, I'm right here. Like I said, I'm on NASDAQ. If I go into the ES, it would automatically plot those lines. I mean, you saw I just changed. I haven't done anything, and then automatically we'll plot all that for you on the chart. Now, these lines you guys see here are just basically your support resistance. These are places where the market, and again, this is going back on time, where the market has been and what it has done before. So what I like to do, I like to use, I'm more of a support resistance price action trader.
Mm-hmm.
Like I said, I like to go in, see what the market is doing for the day, and then wait for the market to come to me. That's another thing, and I'm very big on is I don't like to chase trades. For those of you that do FOMO, right? You know, that's probably the worst thing you want to do is to FOMO a trade or revenge trading, right? That's another thing that blows accounts really quick. What I like about this is the fact that I don't have to chase the market. I let it come to me. So this is today, right? Let me go ahead and maximize this. All right, so this is today. We can see that the market opened, see April 3rd. Yeah, so I'm showing, I'm in Texas, so this is Central Time. You guys see here the times. So market open right here, and then we just see it's just been going up, right? It just hasn't even looked back. It's just making new lows, new highs, higher lows. And you can see that the indicator had a support down here, and it has the resistance up here, right? So the beauty about it is, if it's not close to that, I'm staying away. There's no point of me of taking trades in between, like I said, because I don't like to chase trades, right? Now, what I can do here, this indicator right here is just for today. What I can do is just for a click on a button, I can go into the indicator and then just load the previous day. What I was going to do is just going to plot the lines, and you can see they have different colors. So it's going to tell me what it has done on previous days. Now you can see that the market has been, you know, on those levels from previous days, right? So just looking at this here really quick, keeping things really simple. I don't want to overcomplicate anything. Like I said, I like to trade price action. I do a little bit of, I read the candlesticks as well. But just looking at this, you can see that the market has been hitting these levels, respect them. Like right here, this first move went down. Let me go ahead and grab my, right here. So you guys can see that market came to this support and it just bounced off, right? Really, really nice. Came to the resistance, came back down, retested that resistance, came back, and it just broke, right? And it just took off, and it came back to this next resistance. So this tool is giving you what you were talking about, is we trying to, you know, trying to get the best prediction of what the market is going to do. So if I just go back, let me go back here, right? Just going back and just seeing what the first moves were here. I have options. I already have here options to start taking trades if I wanted to. Meaning that what I was telling you is I like the market to come to me. So if I see that the market is making this first move up here and it's getting close to one of my levels, right? I'm more, like I said, I'm more of a price action trader. I don't just take trades as long as the market hits these levels. I just like to see what the reaction is. And if I start seeing that it starts getting a rejection, then I can jump on these trades, right? And the other thing about this tool is the fact that it is not only for take entries, but you can also set, it will give you your exits as well. So in this case, for this move right here, I apologize for that. In this move right here, let's go back. As the market was moving, it hits this resistance and it starts getting a rejection. If I take a trade here, I can have either, if you guys already have like a strategy already set up where you take certain amount of ticks, by all means you can do that. Or you can have these levels also be your targets, right? So in this case, we can see that the market came down to that target, and I mean, almost to the tick, right? It went ahead and hit it right there. So you can use this tool not only to see what the market is at, where it's trying to go, but you can use it for entries, or you can use it for exits as well.
So what's interesting, I think, Jamie, that you pointed out here is the levels you saw today were pretty wide, right? We weren't reaching those extreme, maybe because yesterday was a wide trading range day. And so, we're not hitting that low. We're not hitting that high. It doesn't mean we won't, yet today. It just means we haven't. So you went back and you said, well, let's look at yesterday's levels. And I think that was really interesting because it seems like the market remembered, or the market respected those levels, from yesterday. And so that's what I would have seen yesterday, those levels on yesterday's chart, but we could still hold them today. We do that with other analyses, right? We do it with like a point of control with the volume profile. We'll extend it another day just because an adaptive study, you want to see what the previous value was and see if it's being respected. I think that's kind of the case here. This is adaptive, yet it's not adaptive during the day. It's what I like about this is these levels don't change during the course of the session.
Right. Yeah, these levels are sent out to you way in advance. So you have this, you receive these levels that you can plot in your charts the night before. So
right.
By the time you open your charts, you can just load them and they already be there for you. Like you're saying, you're correct. They don't move as the market moves. They're just set levels. So you don't have to worry about, I tell doctor, like, you should not call this an indicator, because it's not really an indicator. Indicators lag, right? The indicators all lag. I don't care which one it is, they're gonna lag. This is not a lagging indicator because it's already set, right? But like you're saying too, you can use this with whatever you're already using. So this is not just the one tool that you're gonna use and that's it. You can implement this to whatever style of trading you already have. This is just an extra help that you can have, again, for you to see where the market is trying to go. And once it's there in those levels, then you can use whatever you are, whatever your strategy is to take trade. And yeah, like you say, so right now, if I just have today's levels, we can see, right? Like you said, market open, it has not touched any of the levels. I can either just completely stay away from NASDAQ today, or it's real simple. I can just go to ES, right? Or I can see, we can see that ES on today's levels, it actually already went through that level and it just completely destroyed it. It tried to come back to retest, right? So when the market was down here, okay, let me try to get this. When the market was down here, this is resistance, right? As soon as that candle was just ridiculous, right? But as soon as it breaks that, then it becomes support. So what we can do at this point, what I like to do is, like I said, I'm more of a price action. So I want to see what the market is going to do. I want to see what the reaction is. So I'm expecting a reversal or kind of a market to come back and retest, right? Yep. That support. And then it did. It did come down. It might not have touched it all the way down, but it did that comeback. So this is where I will start looking into taking trades if I want to go long by just using this, right? And again, this tool, like I say, what I like about it is if I miss this trade right here, right, and my next level is way up here, I'm not taking any trades in between. Okay. Because there's a lot of things that could happen. So I stay away from that. And like I said, just not trying to complicate my trading.
Sure. Can we have a couple minutes left. Can we just take a quick look at gold? I know you mentioned gold earlier, and gold's been, crude is the same way, right? It's been on this nice little bull run, getting a little elevation. And today, it's interesting that it's still there.
And let me go. What's a good time frame? What are your?
10 minutes, fine. 5 minutes, 10 minutes, okay, whatever you like.
So this is all right. This is going to be a 10-minute. This is going to be for today. So you guys can see we have our support resistance. This is for today. So the market open, let me go here. So market open over here. So we can see that the market, as soon as it opened, it didn't hit this support, but it went and I mean, right now live, it's right there at the resistance, right? On a 10-minute time frame. So we can see that as soon as this candle broke the resistance, this candle right now is trying to see if it's gonna either continue that move up, or is it just gonna break back down, become resistance. Now, just really quick, if I look left, what the market has done at this levels, it has been rejecting it, right? So just going back on just looking at this, it should reject it as well, unless it's gonna ready to get new highs, right? So if it breaks these levels right here, then that's another opportunity for oops, sorry about that. That could be another opportunity if it breaks these previous levels for it to just keep going higher.
Right, and that thick line up there, if I recall, I think that's more of a stop level, right? So one way you might look at that is, okay, if we do find resistances at the 2307 level or 6 level where we are now, okay, great, we might take a short, but we do have a stop built in too, right above 2310.
So what I was, so the dotted lines are more of your areas where the market tends to break more often.
Okay.
Whether it breaks that level, and your solid line is where it has a better chance of being rejected.
Got it. Well, you know what, Jamie, it's been a pleasure to have you on, and it was a pleasure to talk to Dr. Levy. This is really informative. Where can people find you? I know you're on the NinjaTrader ecosystem, but where can people find you?
So with EG indicators, of course, like I said, I just became a member with them. So I'm there. I guess Doctor can tell you more of the social medias from EG indicators. I just became brand new. I just joined the team, so she'll be the one.
Yeah, egindicators.com, and we have a Discord invite link, so you can come and reach us to us.
That's the new technology, Discord. So glad to hear you're on that. Awesome. Well, thanks both of you for coming on to the live stream. We appreciate it, and we'll see you again next week, right?
Yep.
Correct. See you next week.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.